54% on a quarterly basis. That is the first look on the set of numbers that we have. I have my colleague Harsh joining me with more details on what sort of numbers has HDFC Bank presented in this quarter.
Well, absolutely, Pragati. So you've pointed out a few key ones. The other one is, of course, your net interest income, much awaited. That number has come in at 28,471 crore. It's a 4% uptick sequentially, clearly indicating that the margin recovery has not fully taken steam. At least that's the current sense immediately right off the bat. In terms of the way in which provisioning has happened in this quarter, we've seen provisioning at roughly 4,200 odd crore. If I can be precise, it's 4,217 crore of provisioning that has happened versus the 2,904 crore number. Of course, the 2,904 crore number was definitely a little bit, it's a slightly lower base. So, of course, that is the other piece. But profit seems to be a bit right off hand. Vishy, what's your clear sense of the numbers?
Right, Harsh. So yes, you're right. There is a NIM issue that's cropping up. According to the bank's release that has come out, the core net interest margin is about 3.4%, while the interest earning assets are about 3.6 odd percent. What we also know is the advances and deposits numbers. Now, those are the same as what was reported during the provisional period: 4.9% sequential growth on the advances and about 2.2% sequential growth on the deposit front. So that those things point to some amount of operational slowing down of the business as well. Remember when the provision numbers came out, we did point out that the deposit numbers are looking a little weaker for the third quarter. The bank has added about 40,000 crore worth of deposits on a quarter-on-quarter basis, as opposed to the usual trend of about 1 to 1.5 lakh crore that the bank sees. So that shows that the bank is struggling on the deposit front. Over and above that, of course, as the cost of deposits has gone up, you're seeing that impact directly come on the net interest income. Earlier, as Harsh said, about 4% quarter-on-quarter growth on the NII front. And as we can see, that the NIM has also sort of remained stable at about 3.4 to 3.5% within that range. So those are the immediate numbers that we're looking at on the HDFC Bank front. I'll leave it to Harsh and Pragati to discuss further on the numbers as they take you through further details in the figures.
Well, absolutely. Thanks so much for that quick wrap, Vishy, on how the numbers are panning out. I also have with me Aditya Shah in the studio. Aditya, firstly, pleasure having you here on a day when we're seeing HDFC Bank's results. It's ironic that I'm having you here because you had so many conversations on this, even offhand, even off camera. So my key number, my key takeaway from whatever Vishy has broken down, 3.4% on the NIM. That was the key number which one was looking for in terms of recovery and stock price recovery as well. How are you viewing this number?
So tad bit of disappointed with this number. What has really happened is HDFC Bank's book came with a NIM of above 4%. HDFC Limited's book, because it was a secured book, came with a NIM of 3%. So net to find some stability, we were at 3.4, 3.5%, and the market really did not like this erosion in the NIM, and that's why the stock price is not doing too well. Now the management had guided that slowly and steadily they are going to get this NIM up to 4%, and that has not happened this quarter. We need to understand from the management what were the triggers this quarter and why the NIMs did not recover per se. On the deposit side of it, I have this information that HDFC Bank is not amongst the top deposit percentage paying bank, but still it is garnering very good deposits per se. So the perspective is operationally HDFC Bank, as time really goes on, needs to improve their NIM for the market to give it the valuation that it did of 3 or 4 times price to book. However, this quarter, it seems to be a disappointment that the NIMs have not started to inch up gradually.
Aditya, when you talk about disappointment in terms of the NIMs, and I totally understand where you're coming from because of the explanations you've given us, If we specifically looking at the deposits, do you see this trend continuing? Because as even Vishy rightly mentioned, the numbers that have come out are not up to the mark that we have seen in the previous quarters. So one, is the deposit trend expected to continue? And when can we see normalization in NIMs or them getting better going ahead?
See, the perspective is the benchmark with HDFC Bank is really very high. They're adding 500 branches every year, and the system's deposit growth is just at about 10%, whereas HDFC Bank is growing at about 18 to 19%. So the perspective is, when the barrier is really very high, people start to expect more and more and more. So the perspective today is HDFC Bank is adding 2.5–3 lakh crores of deposits every year. And from that perspective, the bank is becoming stronger and stronger. When will the NIM recovery really happen? The NIM recovery will really happen when HDFC Bank starts to push retail unsecured loan growth very aggressively into the market. Right now, over the last 1.5, 2 years, HDFC Bank has pulled the plug on retail unsecured. Retail unsecured comes with inherently a higher interest rate and a higher margin per se. They were growing on the corporate side of it. So slowly and steadily, as the retail unsecured corporate book grows, HDFC Bank's NIMs will come up, but it is taking a little bit longer than expected. That is why we've seen that the stock price has been really disappointing per se. But from the con call, I will gather that they will point out to a recovery that will happen somewhere in Q4 or Q1 of next year.
Absolutely, Aditya. So, when I'm looking at the OPEX as well, this time around, just to point it out for benefit of our viewers, OPEX has come in just below the 16,000 crore mark for Q3. It stood at 15,400 crores. So you've seen a bit of an expansion where OPEX is concerned, roughly 3 to 4%. They haven't added significant number of branches in this quarter. Possibly part of the reason why deposit offtake is also slow. Can they meet their guidance of 1,500 branches for the full year? And do you believe that they'll do 2 lakh, 2.5 lakh crore of deposits as well this year? Because that will hold the key. Q4 seasonally strong, but can they do that in your view?
Yeah. So generally, my gestation period whenever a new branch is opened up is about 1.5, 2 years before you see any type of good deposit base coming in. So the branches that HDFC Bank has already put up in the last 1 year, they'll start to bear fruits now, time and again. And OPEX is a very irrelevant metric now to see for HDFC Bank because they are in a very, very aggressive expansion mode. I have not seen any large private sector bank undergo this aggressive expansion. In the rural areas where there was no HDFC Bank, now there are 3 HDFC banks trying to get the deposit base. So my perspective is deposit over a longer period of time will not be a problem for HDFC Bank, even though on quarter basis it can be up-down scenario, but they will not be a problem per se, first point. Second point is they will need to start to push on their loan engine. The whole problem with HDFC Bank right now is not the deposit piece, it's the loan engine. Once the loan engine starts to fire aggressively, they will be able to get back all of these metrics very rightly. And because the NIMs have eroded, the market has also eroded their valuation. Their valuation is at a 20-year low at about 2 times price to book and is amongst the cheapest amongst all private sector banks. So all of it is priced into the stock, and now we need to see how the recovery really comes in.
Right. Aditya, one point very quickly that stood out for me was with regard to provisioning. This time you've seen a bit of a spike. We've seen a benign credit cost cycle. Any concerns in your view?
So in my view, HDFC Bank sufficiently slowed down when the unsecured melee was going on and everybody was trying to grow very aggressively. Only 2 concerns for HDFC Bank would be the HDFC Limited's corporate book, where they have already said that they will be making provisions, and the other piece is the agri loans, where they need to really concentrate and see what is really going on. But from my perspective, on asset quality, I don't foresee any problem with HDFC Bank as of now.
Right. No problem with HDFC Bank. In fact, NPA ratios seem to indicate that there is some bit of improvement. So that's the first take, of course. We'll keep you posted. Thank you so much, Aditya, for all of those views from Pragati, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit because we'll give you the latest on what's happening with regard to even the con call on HDFC Bank. So stay tuned on that one.
Welcome back. You're watching The Reporter on NDTV Profit. And before we delve deep into the show and the main headlines, we just gave you a glimpse of how the HDFC Bank's third quarter numbers are looking. Now, let's move on to the news. ONDC and JustPay launched an open mobility app, Nama Yatri, in Delhi. Now, Nama Yatri will connect auto rickshaw drivers to users for rides in Delhi on a zero commission model. Our colleague had the chance to talk to the CEO of ONDC, where he talks about the significance of an open mobility platform.
I'm really excited today because Delhi is the capital. And as you know that in the last 1 year, then we have been going, expanding ourselves across various cities. We are waiting for the day to start in the Rajdhani, and we are excited. And as you know, open network covers everything. This is something that gives the power back to the brand owner, back to the merchant, back to the driver, and to the consumer without anybody in between trying to control their life. And that way, we believe that this is going to completely transform. So if I just touch on the mobility, my ultimate dream, what we are trying to do is, if I am going, let's say you can see that I'm going from here to Trivandrum. I should be able to, in one app, I should be able to take an auto to the metro, from metro to the airport a ticket to my Trivandrum, there in taxi to reach home. Everything should be one card. Why should I go into some umpty number of thing and who have stranglehold on each component? Here I should be able to use the one that I like. And similarly, each of the service provider, whether it's an auto, he should be just registering himself in the net and he should be visible to anybody, not somebody who is controlled by the platform. So this is a fundamental paradigm shift, and we are very excited that today it is kicked off. It's just a beginning. What you're seeing is a tip of the iceberg. We are just a beginning.
Right. So right now it's just autos, but slowly and steadily as we go ahead, it'll be an integrated version of transport.
Every mode of transport would eventually become a part of it. And that's what we are working on, and all across India. As you know that we are now in 4 or 5 cities, and you would see in the next few months more cities adding, including metros. We are expecting at least a couple of metros to go live during this month itself in some part of India, and more to join. It's a question of time. They all need to have their own system adoption, etc. So there is a buy-in from the larger community. It's a question of each of them being enabled based on their hundreds of priorities. Each organization has lots of priorities pushing them, so they will find the right time to do that.
That was the ONDC CEO. Now, it's day 2 at Davos, and the NDTV network continues to get you the top corporate and political voices from the World Economic Forum. My colleague Neeraj Shah gets us a sneak peek into all the actions that's taking place at the World Economic Forum.
It's a sunny day, but it's minus 18 degrees here, so it's very, very cold. But I must say the India interest is hot. We established that in the conversations yesterday. I think I look forward to some very interesting conversations today. Thus far, we've spoken to Dipali Goenka, who spoke about how the interest for cooperation when it comes to manufacturing out of India seems to be very strong. We're going to be talking to the head of investment banking EMEA region at JP Morgan, V.S. Raghavan, today to try and understand what is deal making looking like, particularly inward. So that is one. Similar conversation with the Jefferies think tank, Ashish Agarwal and Mahesh Nandurkar. And a bit later in the day, I'm really interested in listening to Peter Wozer of ABB about what is it that could be happening when it comes to the whole industrial space globally and in India. So I think those are things to watch out for. But I must say, it's very cold here. And we are hoping that the snowfall, which was very strong yesterday and blanketed this town under a thick pile of snow, eases up a bit today so that it's possible to do a lot more outdoor conversations, because that's really the charm of Davos, isn't it? Back to you.
That was Neeraj Shah live from Davos, and we'll keep bringing you more updates from there. Now, the Union Power Minister R.K. Singh during the day inaugurated Distribute Elect, which is India's second largest event in the transmission equipment space. The minister highlighted the importance of the event and the sector's growth in the last 9 years. Vikas Srivastava, my colleague, joins in from the venue.
Yeah, we are standing at India's largest transmission and distribution sector exhibition, Distribute Elect, being held in Mumbai from January 16 to January 18. Close to $1 billion of inquiries are expected in this event. And also these are business inquiries where buyers and sellers can look at innovative products happening across the segment in distribution and transmission sector. The event was inaugurated by Union Power Minister Mr. R.K. Singh, and Mr. R.K. Singh also highlighted the development of power sector in the last 9 years since the government came into being in 2014. The minister highlighted about the peak power demand, the way it has grown to almost 80% in the last 9 years, and also power as far as generation and transmission and distribution sectors growth is concerned. It's all expected to double by 2030.
My determination is that each and every capacity, each and every megawatt of capacity must be on bar. That's my determination. So it will be on bar.
So
if they are on bar by themselves, I will not have to invoke section 11. If they don't, if they are not on bar, I will invoke.
So
section
what
11.
are benefits of this amendment rules which you introduced yesterday?
Basically, we made life easier. It's called ease of. It's called ease of doing business. It's called ease of doing business. I have removed the requirement of licensing for dedicated transmission lines. Now you get connected to the transmission line. You get connected at one place. You are connected to the India. That's what we have done.
Now let's move on. The Adani Group will offer eligible residents of Mumbai's Dharavi slum clusters new flats. Now these flats are measuring almost 350 square feet, which is almost 17% extra space and the highest among slum redevelopment projects in Mumbai. We have our colleague Saloni Kothari with a special report on this.
One of the largest slums in the world is set for a redevelopment. After more than 2 decades long of delay, the Dharavi slum in Mumbai is going to be jointly redeveloped by the Adani Group and the Maharashtra government. The group won the bid in November of 2022 and has already hired a contractor to conceptualize and design the plan. We spoke to a few residents of Dharavi to understand the need of redevelopment and how important it is for them to get new flats. The eligible residents in Dharavi will get a minimum of 350 square feet. That's the claim being made by Adani Group. This is about 17% extra from what is mandated by the government to provide urban housing to the poor. The flats will also include independent kitchens and toilets.
हम लोग को बाथरूम के लिए भी तकलीफ होता है. हम लोग बाहर जाते हैं बाथरूम, पैसा दे के बाथरूम जाते हैं आते हैं. हम लोग को घर चाहिए तो धारावी में चाहिए और हम लोग का बड़ा भी घर चाहिए और हम लोग का हर चीज़ का सुविधा यहीं चाहिए.
बहुत ज़रूरत है. सब लोग इसमें आते भी नहीं बराबर. सोने में दिक्कत होती है, खाना खाने में बैठ नहीं पाते सब लोग साथ में. बाथरूम जाने में बहुत टाइम लगता है, नंबर लगाना पड़ता है वहाँ पे. कम से कम 4-4 नंबर रहता है. बड़ा घर मिल जाए, सब कुछ इसमें रहे.
थोड़ा जगह बड़ा चाहिए कि थोड़ा आराम रहे. इसमें बहुत तकलीफ निकाल लिए हम लोग, बहुत ज़्यादा. थोड़ा नहीं बहुत. अरे किचन रहे, कम से कम किचन अलग रहे और हॉल रहे, बेडरूम रहे, सब रहे. क्योंकि 2 बेटे हैं, बहू हैं, मैं है, 2 जन हूँ, पोता है, तो ये कि हो रहेगा तो कैसे एडजस्ट होएगा. नहीं.
With camera person Vijay Sartape in Dharavi, Saloni Kothari for NDTV Profit.
That was my colleague Saloni on a special report from the ground. Now, GQG Partners increases stake in ITC. This takes GQG Partners holding value in ITC to over 16,500 crore rupees. Let's go across to my colleague Mahima for more on this.
Right, so GQG Partners have increased their stake in ITC. Now, if you see, they were holding 1.58% as of Q2 FY24, and as of December 23, they are now holding approximately 2.8%. Now, this means that as of today's closing price, they hold approximately 16,500 crore worth of holding. Now, if we also compare this to holding as of the last quarter, the last quarter's holding was approximately, as of September 23, it was 8,744 versus that of over 6,502 crores today. So basically, this means that GQG has been increasing stake in ITC, which is almost doubled in the last 1 quarter.
That was the update on ITC. Now, it's not just the construction of a new temple taking place in Ayodhya. It's the making of a new place. We are talking about 35,000 crore worth of investments already and over 2 lakh tourists every day. My colleague Pallavi Nahata brings you this ground report straight from Ground Zero.
Now, when you visit the Lata Mangeshkar Chowk here in Ayodhya, you're likely to be greeted by devotional songs in her melodious voice. But until that happens, what you're most likely to hear is the sound of construction. It's not just the consecration of a new temple that's taking place, it's the construction of a new city and in record time. Now, it's a juggernaut of development, infrastructure and tourism projects. Private and public investments are being pegged at over 35,000 crore rupees, largely being led by public investments at this juncture. In public infrastructure, we've seen the development of the international airport, the railway station, bus terminals, flyovers, footpaths, sewage systems, parking facilities, dormitories, food courts, resting places, and a lot more. Private investments include those in food, hospitality and housing, among others. Now, what we're seeing is a rise in per capita income for people in the area and also a rise in employment opportunities. Most of what's being done is also keeping in mind environmental sustainability. In fact, the municipal corporation has incorporated a Vedic sustainability index for the city. The mandate is clear: to make Ayodhya a global spiritual center. We're already seeing 50 to 60,000 tourists coming in, and once the consecration of the temple on January 22nd takes place, this number is likely to go up to 2 lakh tourists a day for the next few months. Well, it's not just a change in faith that the people here appear to be witnessing. It's more importantly a change in fortunes.
That's all that we have for you on The Reporter, but for more news and updates, please keep watching NDTV Profit.